So I just wanted to open by giving Karen an opportunity to comment on the presentations, given that we haven't had a chance to hear her speak yet. So Karen, over to you.
Good afternoon, everyone. Thank you, Samantha. So generally, I'd look at this from a portfolio management perspective, right? And I'd say success over the long term really has to do with assessing your investment objectives and identifying the level of risk tolerance that you're willing to take at any point in time. You're looking for opportunities in the short term, but you definitely have to ensure that you reduce your risk, right, by building a very diversified portfolio. You want to assess the current economic environment, the financial market environment, and the conditions. You want to map your cash flows, your cash flow requirements in terms of ensuring that you can deploy your strategy without interference from impulsive market noise, right? You want to stick to fundamentals. For core portfolios, you want to match your investment horizon to liabilities. Ishan brought that up in terms of how pension plan managers will differ from other investment managers when looking at fixed income. You want to properly understand the level of risk you assume when you have those mismatches that you take, right? And ensure that you either decide to mitigate the risk in some way, or at the end of the day, you are willing to accept the risk. And so during times of market turmoil, the risk that you've accepted, you want to ensure that you stay the long haul in your investments. It's also important to maintain a healthy cash balance so that when opportunities arise, you can take those opportunities, right? As you seek to look for those opportunities globally, the speakers would have articulated about return and looking at comparative return. And I would want to say, look at your real rate of return that you're expecting, right? Ensure that it is your expected return is adjusted in currency terms, right? And ensure that you understand the level of credit risk that you're taking over your investment horizon. So that when we look at the US fixed income in particular, Ishan would have brought up the fact that the US Fed is currently on hold. It's expected, and the key feature speaker, Sanjay, would have indicated to us that there's possibility of a reduction of 25 to 50, or, well, reduction on the Fed funds rate towards the end of the year. As a result, what opportunities can we find there? It is critical to extend duration in such an instance if you expect interest rates to fall. So you find those opportunities. And because you want to ensure that you don't react to volatility, look at your entry points. Because on any one given day, it was also mentioned that there are trading strategies around the treasuries based on how volatile they have been. And so ensure that your entry points are critical. You extend some duration to take advantage of price appreciation when interest rates do fall in US. Opportunities exist across US corporates, US agencies, mortgage-backed securities, and we heard the long list. Again, because of credit spreads widening, be very cautious, stick to your strategy, and stay in for the long haul, or staying for the duration of which you have invested. In Trinidad and Tobago, expect an increase in the interest term premium. And given that these long-term securities are likely to increase further in terms of the interest rates, then what you could possibly do after ensuring your liabilities are properly matched with your investments, find opportunities where you can invest short, roll, and when interest rates rise, invest in long-term securities. But just remember, we don't know what the future will bring, so you cannot take one position for your entire portfolio. Ensure that your portfolio is insulated against interest rate risk. In terms of the region in fixed income, the Bank of Jamaica is currently undergoing an easing cycle, so we would encourage you to look for opportunities where you lock in yields in Jamaica as well. In Barbados and Guyana, Guyana in particular is a growing economy, so there are opportunities, but just remember, you're looking for the rate of return in your currency, adjusted to your currency terms. George would have spoken about equities. I'm not sure I heard any opportunities, but I would read between the lines because he has also said that although the equities have had lackluster performance over the last 20 years, there is an opportunity once you have a long duration to benefit from investment in equities. And certainly if you're looking for a diversified portfolio, because of the risk, as we have seen through the amount of volatility in the financial markets, then you should take positions in equities. On the local markets, we talked about looking at companies that are long US dollars, look at the financial institutions who are well capitalized and have been producing very credible results. But also when you manage your portfolio, have exit strategies, being cognizant of the fact that we have a lack of liquidity in the market. So always look for how do you exit over time given our current environment. In terms of the US companies, look for companies with strong free cash flow, right? Those companies that are insulated from US tariffs relative to their peers, those that have been discounted, take a long-term approach and ensure that over time, you will expect to get volatility, but there will be reward for equity as the situation unfolds. But be very selective in your fundamental approach. So I think that, I've tried to put some color onto the opportunities that have been presented based on the speaker's market assessment, financial market assessments. And I'd want to say, irrespective, in closing, irrespective of what the financial market is at the point in time, you will always find opportunities. Just ensure that you understand the level of risk you're getting into and ensure that you have a plan B to mitigate those risks. And I am sure that you will be successful over the long term. Thank you.
Thank you for that, very balanced view, Karen. So my first question is actually for Sanjay. Did you get to keep any of the $89 million that you, no? Okay.
Oh, I got $10,000.
It sounds like a raw deal. Okay. I actually do have a question for you. Considering the current trade dynamics and tariffs between the US and China, what degree of leverage do you think China possesses through its holdings of US treasuries to actually de-escalate the situation, probably negotiate better terms?
That's a very good question. As I mentioned, China, we have a 2 months lag, so we just have Feb data because Feb is reported in April. April will come only in June. So as per the Feb data, China holds $789 billion. Now I did mention to you I think one thing, maybe I'm a student of history, so even before any of you asked me this question, you may think that Trump did all this, the tariffs. Sure, in the administration, there are advisors who have gone back to the history and looked what has happened in the past. So if we go back 1930s was the first time when the US did play with the tariffs. A very interesting book, Peddling. You can read all about this. It's available on Amazon. Peddling Uncertainty. It's written by Douglas Eisner. It talks about Smoot and Haley Act of 1930. That was the first time US did experience with putting a lot of tariffs. What did that end up with? 1929 depression. Very bad era. Big sufferings. So our experience has not been good with it. Some of you may say, well, Sanjay, that was 1930s. We had another good experience with Japan in 85, 90s. For those of you, oh, George said he's the oldest. For those of you who are old here, Japanese era was the era. You remember that Sony Walkman, all the trend. Now that time, Japan and the G7 nation did sign the famous Plaza Accord. Japan currency was appreciated. Japanese currency was 220, which was bought to 70. Now that is 3 times. And Japan lost all its exports. We have the term called lost decade. That's where Japan never recovered. The Nikkei 40,000, 10,000, interest rates have never recovered, and that's called the lost decade. So I gave you a long answer, but coming back, why similar things cannot be done with China, like a Plaza Accord? Only because China is trading with a lot more countries, and also the Chinese yuan, renminbi, Chinese currency, is controlled by China. China holds $789 billion. Why is China not selling? Well, very clear. If China sells US Treasury, it will bring the Chinese currency in. That is going to help Trump. Trump wants weaker dollar. That's going to put their currency. The only reason I shared this long story is what happened with Japan. Their exports prices are going to become expensive. So China is never going to play that card.
Okay, thank you. I'm glad you brought up the currency conversation, because my next question, for everybody on the panel, Sanjay, for you, for an international perspective, traditionally the flight to safety would refer to treasuries, US treasuries in particular. How has that changed now, and what is safety now? Anybody?
Well, I'll start with safety still remains US dollar.
Okay.
I mean, China has a C919 airplane. Tell me how many of you will pay $200, $500 extra to fly in Airbus or Boeing rather than that plane? Even in China, nobody wants to fly in that plane. So whatever is going on, and this is a temporary factor, I would say with Trump, US economy fundamentally remains very strong. I mean, Trump can tweet and do whatever he wants, but fundamentally we are very strong. Even with all the crises that you have been seeing this month, the markets have been providing liquidity. And the good news, the Fed has not stepped up. Remember COVID time, there was quantitative easing. The Fed is still very strong. The reserves are strong. So I'm not trying to be biased, but I remember when Euro was introduced, there was a big, everybody was like, no, now Euro is a currency, 20-country currency. They are going to rule. Fast forward, they just announced they are slowing down. They reduced their rate to 2.25 this month. Unfortunately, dollar still remains a safe currency, and anything in dollar security provides you the liquidity, and everything with the equity outlook opposite, that provides you in US dollar.
Okay, if I may, a second option would be gold, right? Of recent, however, we saw a bit of a blip whereby we saw retracement in gold. And the reason would have been is that investors were actually cashing in their gold positions to cover their shorts, right? But however, over the longer term, you would find that gold will continue to be an avenue.
I think I agree with Sanjay in terms of the US dollar, and really from a more practical point of view. For pretty much the last 60 or 70 years, most large corporates and sovereign nations have funded themselves in US dollars with very long dated paper. And so even if it does happen, and even if the US dollar, an alternative presents itself, it's going to take a very long time, because currently most of the world's wealth is stored in US dollars.
Yeah, and I just wanted to add, people with a long-term horizon, even the US companies, I mean, we think of the S&P as American companies, yes they are, but if you look at the largest ones, or just across the S&P 500, many of them earn quite significant chunks of their revenue all across the globe. So it's really is almost like a world ETF. You know, so it's not really just the US. So I would always say stay for the US.
Can I add something here? I think it was very interesting. She mentioned about gold, and I mentioned about when the crisis was going on in the Wall Street, who was buying and who's selling. There was one thing that was going up, the gold. Gold today is $3,500. So definitely there are central bankers, agencies, they are selling US dollar or getting out of treasuries and buying gold. Just a little bit interesting thing, gold was lowest when I got married, $250. I still remember taking my fiance to a shop, and she loves gold. So I said, it's our very important day, important time, buy as much as you want. She hugged me, she kissed me, she went all around relatives, friends, saying, oh my gosh, my husband is the best, see, I bought the gold, this I bought. Before COVID, I was invited to the World Gold Conference. It is in New York, to be a speaker, main speaker. And that is attended by jewelers, fashion designers around the world. So my wife said, I want to come with you. And as I was giving this presentation on gold, when the gold was lowest, she comes home and she tells me, Sanjay, I thought you loved me. That was a financial decision. Well, see your face. So moral of the story, when you come for these conferences, make sure your partner stays at home.
Okay, so I'll open it up for anybody in the audience. I'm sure you guys have a lot of burning questions as well. Sure, Wayne. That mic is on.
Wayne Das is the name. First to Sanjay, so thanks for your presentation, very good presentation. I want to ask about the private equities market, because I know that is a huge and growing market worldwide. But there's also a kind of lack of strong regulation in the private equities market, and a lot of funds actually flowing from the traditional banking system into the private equities market. Is that a risk in terms of, because of the lack of regulation, if you get a blowout there, that could easily trigger a financial crisis, certainly in the United States and maybe even worldwide? So I wanted to get your thoughts on that. And then to the other panel members, because of the issues we're having with the equity market and growing the equity market, certainly in Trinidad and Tobago, is there a role for, a stronger role, I should say, for private equity in Trinidad and Tobago? And I'm talking here about, the like syndicated bonds, like, mezzanine type financing, convertible bonds. I want to get your thoughts on, do you see the possibility of that? Because the private equity market is actually growing a lot in Jamaica, and with Jamaica being one of the more advanced in the Caribbean. So maybe there could be a stronger role for that in Trinidad and Tobago. I'd like to get your thoughts on that. Thanks.
Okay, thank you very much. That's a very good question. In fact, 4 days back, we had the economic conference in Chicago, and the same question was asked to the Fed chairman. So, very good question. Just as I talked about in my presentation, the private equity market has been growing, and post-COVID, it has grown really substantially. Money has been coming in, what we call is the non-investment grade sector, in the private equity sector. Now there, again, as I mentioned, the conferences, if you've attended any of them, most of them happen normally in the Las Vegas. That's where everybody likes to be. Its market is actually very well regulated. You have AAA, AA, single A, right up to the equity tranche, and the investors there are actually hedge funds. So really speaking, money has been coming there, but money has been coming from the private sources who clearly know their risk. So even if you take a look at the ETFs, they are very clear who can invest. Even in the US, we talk about institutional investors that can invest in. So really speaking, as we call common Joe or common, they don't have access to it. Recently, we have some ETFs come up, but they are also very clear on this type of investment. So the sector is growing. Yes, it is very risky because it's a private investment, but they are really targeting to the sector which has, for all reasons, not come into the public listed background, which is very good for the market, because for strong reasons, there are a lot of companies, a lot of sectors, they don't want to be in the financial market. They are really tapping that resources, and to me, that's very good. It's good for the growth. For example, just I gave an example for the banks here, really. SRT, significant risk transfer. So what the bank can do with their balance sheet, they can get rid of their entire loan portfolio and move that into investments if they want to. That risk is taken by private equity guys, and what is the bottom line? The bank is now free, can go out and lend more money. So it's, to me, it is all positive. Very high risk, but then high risk, high return. And those who are entering in, hedge funds, and those who are investing clearly know their risk.
I'll just comment on the PE opportunity in Trinidad. I think private, well, I know on the debt side it'll be very difficult just because of where loan rates are. But on the equity side, I think private equity is probably the best segue into SME IPOs, because many people, they want equity financing, they may not have hard collateral, etc., and they're not quite ready to list. But they want somebody to partner with them, take the risk with them, maybe even guide them or bring a different skill set. So even at NCB, that's something that we're looking at, because public equity gives you the out that we would essentially need, or the liquidity that we would need. But until then, there's quite a lot of money to be made on the equity side because of, yes, there's cheap bank financing, but there's also, they also don't take on as much risk, right? So I think that private equity is a big sweet spot for Trinidad, and especially with so many family-owned businesses, they may not necessarily want everyone to know all the numbers. So a private equity partner would probably be ideal for them, so they could, at least get closer towards that public equity.
Yeah, I think private equity excites me because I think that a lot of the small and medium-sized businesses could be a lot better off and grow a lot faster and do a lot more if they access the equity side of the business, because the equity side of the business, as we know, is a very patient side of the business, and it's essentially permanent capital. So I think it excites me. I think the challenge goes to what I was saying earlier. We have forces that are distorting capital allocation decisions. And so, at some point, Because when you come to the private market, whether it's debt, mezz, or equity, it's going to be more expensive. And so to the extent that you can go to a bank and through whatever means get financing, that's what you're going to do because it's going to be the cheapest form of financing. So until then, I mean, I think it's going to be steady as she goes.
So I believe there is a lot of opportunity in private equity, but we have to go back to understanding the level of risk tolerance of our investors base in Trinidad. And basically, if I were to look at the funds invested at the UTC, predominantly investors have gravitated to the fixed income funds, those funds with a fixed NAV. And so we need to focus on investor education, understanding of risk, and how to diversify a portfolio, mitigate risk, so that we can get those investors, particularly from a mutual fund perspective, invested in equity-based funds, balanced funds, that can then provide the capital to these private equity issues, because I believe there is a lot of room to enhance return within this market.
Any other audience questions?
What impact does tariffs have on the global economy, and who benefits or suffers the most from them? Tariffs. Sanjay, please.
Okay. Well, that's a good question. The question is, what's the global impact of tariffs and who benefits and who suffers? As I mentioned, at present, we have 34% of the world global trade between the US and China. And something which has happened really once the China joined the World Trade Organization and the way the US companies have operated, we have this global supply chain management, which has been very interesting. So bottom line, nobody benefits, and if the IMF meeting happened this morning, they reduced the world growth rate from 3.2 to 2.8, and they in fact have come and forecasted that US is going in recession in October. So bottom line, nobody benefits. This is only, as I mentioned, the strategy. The US is clearly targeting China. They want China to come across, sit next to the table, and make sure that there is a fair deal happening there. And they don't want China to be a dominant force. So it's more a geopolitical reason also involved here. But if you purely look at tariff, nobody benefits. Even the US doesn't benefit a lot.
Sanjay, I have a question for you.
Oh, wow. That's good.
So building off of that now, and we as a nation in the 80s went through worse than tariffs blacklists, and during that period, certain businesses thrived locally and survived, and then went on to become very strong regional brands. The nation as a whole did not benefit, but certain institutions within the nation did. So the question is, do you see the same thing happening? And therefore, I'm thinking opportunity as we transition to this now protectivism framework. Should we be looking at small caps or locally based entities within the US that should stand to benefit significantly because they now have business that they otherwise would not have been competitive in before?
That's a very good question. And even the tariffs on China were kind of put in this year, but all major US manufacturing companies, or major kind of not manufacturing, trading companies, and the first one, the major one I would point is Walmart. It's been few years since before first term, they have China plus one strategy. So recently, and that's why very important in this, there are opportunities. The strategy and research becomes very common. Recently, Walmart came up with the report saying that the tariffs are going to impact them, but not that much, because 70% they can source from other countries. So we have to really, really look into the companies, and research becomes very important here. There are tremendous opportunities here, I would say, because it's very kind of the way the market operates. You only get opportunities during times of crisis. But the only thing is you have to be smart enough. We had a big housing crisis. There were a lot of opportunities there. Now we are back to a crisis situation here. There are opportunities, but one has to be really smart and have a buy and hold strategy.
Hi, Stephen Fortuné from Caricris. I have a question based on the presentation that Mr. Sheppard had, where he mentioned crowding out by the government of Trinidad and Tobago. I believe it will probably get worse before it gets better. If we look at our budget, 2025, 2026, the financing needs of the government is 12.8 billion, with 1.4 billion extracted from HSF, but 11.5 billion will be borrowed, most of it domestically. When we look at the HSF, if there's going to be equity volatility, the government may not want to realize those losses. So again, a reliance on local borrowing. So my question is, how do we mitigate government's crowding out? And how do we provide greater opportunities for corporate capital market participation, especially in an environment where we have excess liquidity? Thank you.
Oh, well, I'll take a stab and then I'll pass it over. It's interesting that you raised that point, and in my research to come here, because as I said, it wasn't my wheelhouse when I started talking about debt. The recent increase in short-term rates in Trinidad have nothing to do with, it's a supply-driven issue. So if you look at OMOs, for instance, they're basically non-existent. And so you're finding that people are bidding things up, and it really doesn't make sense. So the supply isn't there. So in terms of crowding out for the government, I don't think that's an issue, because don't forget, we have 100 billion sitting down in deposits. A lot of that are close to or near to zero, and that is desperately looking for a home. And of which you literally have 6.5 to 7.5 sitting in excess liquidity. The challenge with government borrowing, and you see it in the central bank numbers, is that it's just basically a timing thing, right? So it goes out, then it comes back in, it multiplies, it creates a bigger problem, and so you keep getting that circulation of funding. So I think, to answer your question a long way, I think we have a long ways to go before it then becomes a material issue for us. I would rather see it go there than parked in cash.
On the bond side, I would argue is less crowding out and more just a function of what we would have spoken about earlier, which is the cheaper bank financing compared to what a bond could offer, and the process to get a bond done takes a lot longer. A loan you could get the money in 2 days, bond may take 2 months, being generous. So that's just how it works.
Any more questions?
Thank you, Sanjay. Thank you, Karen, Ishan, and George, Jonathan. I'm here in my personal capacity. The comment about the safety of the dollar, Karen mentioned gold. Please, will you comment on the argument that the United States always had their chickens coming home to roost with the deficit, the elephant in the room, as Sanjay put it, but that the dollar is not as safe as we perceive it to be, and the tariffs are effectively just a catalyst for the dollar losing value, or at least it's a reserve currency status. That the deficit will have brought us there anyway, but what do you think about the tariffs doing it? Perhaps in our lifetime, do you think a a barrel of oil will be denominated in anything but dollars?
So me.
I'd
Okay.
like to hear from everyone.
Well, the question is about the dollar, and
Yes.
the barrel of oil will always be denominated in dollar. Why? Because where is the oil produced? And I was a portfolio manager in the Middle East.
Right.
I spent there 10 plus years. They have nothing, no industries. It's just oil. And this is just a little bit of study for all of you. There are 6 countries in the world. They are called GCC, Gulf Cooperative Council. They are monarchies, true monarchies. And I experienced that. So if you walk in and somebody likes you, they say this hotel is yours, it's yours. So the 6 countries are, if I may name them, Bahrain, Kuwait, Qatar. We all know Dubai, but it's the United Arab Emirates, Saudi Arabia, and Oman. All they have is oil, nothing else. And in those countries, everything is controlled by whom? If you see, the recent study came, 96% of assets are family owned. And which families? You can name them. And they are deeply connected to the US for the safety and security. So the oil will always be in dollar, and only reason because if you look at wealth around the nation, it is being held in US dollar. So that's the reason why kind of, even with all this news of tariff, the dollar, yes, I mean, even the administration wants dollar to kind of currency to depreciate, but from losing point of view, that is going to be a very difficult argument.
So you don't expect that read that comes out from the February numbers coming out, excuse me, the April numbers coming out in June, there's no level of selling from foreign investors of treasuries that would prompt you to change your mind?
I don't think so.
Okay. Anyone else? I'd love to hear your opinion. Thanks.
So I agree with the position that from the administrative point of view, they want to see the dollar depreciate, right? Because it would mean that their goods and services will be more attractively priced on the international market. I still think that the dollar will remain, the major trading currency. Again, for, the amount of different countries and corporations that hold dollar deposits, that will continue, particularly as this tariff situation eventually gets resolved, don't know when. There will still need to be global trade, and the alternatives, and I'm not talking about other currencies now, we're looking at Bitcoin, for example. We need to have policies in place and general acceptance, which we're not there yet, to see currencies like the dollar lose value to that extent. So I think that the currency will depreciate, and it will be good for the US, but it will still remain a strong currency.
Well, I just want to add, just given this is an outlook, global, yes, but also local. It's kind of funny that we're talking about the question in the US dollar and the US dollar depreciating when, if you look at the TT dollar, I feel like it's always depreciating, at least on the informal market, right? So I just wanted to make a couple of comments on the equity market. There was, when I started probably around 10 years ago, the 10-year yield on the GOT bond was 2.5, and those used to be heavily oversubscribed. So my experience would have been a bit different. So I actually find the 10-year yield the highest it's ever been at 5. But they also had a large amount of international investors invested in Trinidad, right? So you would have frontier funds buying Republic and Massy because you could get your money out, right? You could convert your US, buy Massy shares, buy Republic Bank shares. It go up, you sell, and you convert back. No issues. But that has drastically changed. So I think our equity and fixed income outlook is very much influenced by the FX situation. And I know we mentioned it earlier, but in terms of PE and SME, I would focus as much equity finances as I can on exporters and manufacturers, because we really need to boost our USD supply. And I think that would actually fix some of our problems on the equity side as well as the fixed income side. Because if there's no flow of US dollars, well, one, you have no choice. You have to invest in TT. But it would be nice to know that even if you had the choice, the Trinidad, you still stay in TT because SME equity would yield you more than simply converting your currency and buying S&P, SPY, or a US Treasury for 1 year. So, thanks.
Jonathan, was it? Yeah. What I will say, and this is entirely anecdotal, yeah, as I said earlier, I've been doing this for 25 years, and I've seen several crises happen during that time. And in my memory, this is the first time that there has been, in my memory, and Sanjay, you might be able to correct me, literally an America sell trade. And so before it was, okay, well, things are getting bad, let's cash up into US or USTs. The narrative is different this time. It could just be media playing tricks with words. But yeah, that I would say is different. So I think if you think in a 50-year cycle, or Schumpeterian cycle for those economists in the room, you might be seeing the start of something.
Okay, I think that's actually all we have time for today. If you have more questions for the panelists, I'm sure you could corner them after the panel. I'll hand you guys back over to Kashala. Again, thank you so much to everybody on the panel. Thank you, Karen, as well. This was really insightful.